Hello, gang. Doing quite well. A little bit out of breath.
Oh, man. Did you jog here? Or?
Well, I just had 30 minutes, so I went for a jog. The first 30 minutes we had since this morning. Back-to-back calls.
Good for you. It's a healthy decision.
Well, you know, gotta let out the energy somehow, you know?
Right. No doubt.
And boy, are we full of energy these days.
Excellent. Good to hear. All right, so it's 32. People are still filing in, but what I'll do, I suppose, Publius, you want to kick us off with any opening thoughts or anything recently on the Bean front, or heck, anything else? Lots of stuff going on in the crypto space right now. Anything you want to kick us off with before we get into the chat?
I mean, there's so many different things going on. It feels like we start class with that so many times, but for the first time in a long time, most of it is not Beanstalk related, if you will. So there's something. There's certainly something nice about seeing everything blow up and not having to worry about any of your books blowing up.
Yeah.
The ironic, or maybe, sad part about it is that, there's no books to be managed, which is obviously ugly. But I don't know. It's been very exciting to watch what, in our view, has been to date the largest competitor to Beanstalk, Terra, go through the shit. And it's very interesting from an economics perspective, very interesting from a social perspective. It's just fascinating. This is, if we didn't have so much work to do, I think I'd be on crypto Twitter just 24/7 eating all this shit up. But nonetheless, trying to stay on top of it and learn as much as possible from this unique opportunity and data point, if you will. Yeah, it's crazy shit, man. Crazy shit. And it isn't just crypto markets blowing up. It's also lots of other markets. It's very interesting to watch happen in some sort of synchrony. Yeah.
Crypto markets, traditional markets, everything is in flux. And yeah, I mean, it's been wild to watch this UST Luna situation. And a lot of mixed emotions. Obviously, you feel bad for everybody that's going through a lot of pain right now. But it has been really interesting to watch their team, to watch Do Kwon react and how their team has kind of pushed back. And just the last 36 hours have been pretty fascinating. So,
I'm just as a way to maybe get us started here with class, where I'm sure people will ask for funding updates and stuff like that. Look at the behavior of Do Kwon on Twitter, and particularly even over the past 24 hours around now trying to get funding secured and stuff like that. Is that really how you guys want us to talk? Come on. It's not a good look, in our opinion. So, please bear with us as we try to do what we view as, the right thing and remain very conservative in how we project how things are going. But high level, very enthused by what's going on the fundraising side. But don't have too much of a substantive update in terms of additional capital commitments, maybe up from 15% to 20%, let's call it. So some marginal progress in terms of money in the bank, if you will. But lots of other progress as well.
Good stuff, and astute observation on Do Kwon too. Agree with you there. So hopping into the discussion, the Guilfoyle kind of kicks us off with an interesting theoretical question. So they write, in theory, should a stablecoin always be redeemable for its peg? And how much variance above or below peg, if any, is acceptable?
So this is what a great question, the Guilfoyle.
Indeed.
I would make the argument, or we would make the argument, that it is crazy for a stablecoin protocol to make any sort of promise, hard promise on stability. In the sense that if you have people that are willing to sell their beans or their UST for less than $1, so be it. Now, you could make the argument from a utility perspective, the fact that there are periods of time where you can only sell your beans for less than $1 or your UST for less than $1, that hurts the utility of the protocol. But I would argue that the main thing then to optimize for is minimizing the time at which the protocol is below the peg effectively. Variance is less of a priority from my perspective. When you do have depegging events, it's highly likely that you're going to have significant downward volatility, particularly in models like the Terra Luna one, where it's a closed economy to a large extent, so particularly susceptible to, if not manipulation, certainly larger movements from a select few set of players that may be incentivized to temporarily facilitate the depegging. And we're certainly seeing the misalignment between UST holders and Luna holders play out in the market at the moment, and that's all very interesting. But definitely don't think in theory a stablecoin should always be redeemable for its peg. I think in theory, we think in theory a stablecoin should be redeemable or worth. In the case of Beanstalk, it's not redeemable for anything, but it's whatever it trades against. There's no problem with variance above and below the peg, in our opinion. Now, there is a big problem if your users don't realize that, right? So that's one of the things that, from an education perspective, I think we've spent a lot of time talking about, right? Natural oscillations above and below peg, or how the protocol works, how Beanstalk works. But in the case of Terra, there seems to have been a significant amount of expectation that this was not possible for some reason. So whether that was an education problem, whether that was a lack of understanding of how the model works in practice, where the throttle between the bridge from Terra back to Luna, that bridge is limited, or the ability to convert from Terra to Luna is rate limited. That effectively implies that when you have large flows out of UST, if you reach the rate limit, then it's likely going to result in a depegging of UST. So the protocol is designed that way. Don't think there's a problem with that. And as we were tweeting about yesterday, we're betting the over the long-term recovery of the system, independent of what happens over the short term.
Good observation. So what goes through my mind, and feel free to correct me, it almost seems like rather than whether or not a stablecoin should always be redeemable for its peg, it almost seems like the performance should be more around speed of return to peg. Is that,
from a theoretical perspective? I think there's a good argument to be made around that.
Yeah. Yep. All right.
Which again, then the question isn't just, it's really how frequently does the price oscillate above and below the peg, as opposed to the volatility above and below peg. Now, you could make an argument both are very important. I'd probably agree with that. But from a utility perspective, crosses is what's much more important.
Yeah, and it's very interesting, and even looking inside of our crew to watch. I watch Sync. Sync's and actually a handful of our folks really on about that peg cross as such a key data point. So looking down through the chat, so actually Dumpling just shot me a DM. Dumpling, I'm good to go, man. You're good. Enjoy your time, your vacation. I'm more than happy. I had this marked in my calendar to host anyway, so never a problem. American Pharaoh asks in the chat, they ask, when generalized minting?
Well, long story short, it's likely that the protocol relaunches with a single liquidity pool for simplicity's sake, but the protocol will, in theory, support generalized minting upon restart. So most of that work was already done prior to the attack and is being audited.
Excellent. That's great. All right. So, next in the chat. So Neurovirus writes, can you go into depth on why the NFT is better versus a fungible? I'm assuming they're saying a fungible token.
Sure. From a practical perspective, the main advantage is liquidity. So this fungible token, it's unclear what liquidity would look like for that token, and furthermore, how to incentivize it. And more specifically, in terms of Beanstalk complexity, if you have these yield-bearing tokens that are now in an AMM providing liquidity, the distribution of the yield from those tokens is sophisticated and complicated. Whereas if you have an NFT and you list it on OpenSea, there's no dev work required whatsoever to have liquidity for these new tokens that are being added to the ecosystem. So purely from a practical perspective, this makes things dramatically simpler.
Very fair. I actually had a very similar conversation with a IRL friend of mine. We were talking about this exact thing. That was my guess, was that the NFT was a more elegant solution. So next in the chat, Austin called you out for jogging, which, you got to stay healthy. There's nothing wrong with a little jog, especially when things are busy and a little crazy. So we've already talked a little bit about UST. Scooby22 writes, can we hear Publius' thoughts on UST and potential impact of the capital raise? So that we've talked about that a little bit. Is there anything else you want to add in that light?
Well, on the one hand, everything cuts both ways, right? On the one hand, there's so many thoughts I have here. First, it fucking sucks that Beanstalk is not on right now, because it would be the star of the show. And that is just, there's cost to just not being up, and it sucks. The fact that UST is imploding is not good for Beanstalk in the sense that some people may get further spooked from non-collateralized or algo stables. But it's probably good for Beanstalk in the sense that Beanstalk's model is, in our opinion, dramatically better than the UST model, and hopefully this brings more attention to that. And the failures of the UST model are exactly what Beanstalk is better at. The positive carry of Beans create a dramatically better product market fit than subsidized yield on Anchor. So, in terms of direct capital available, hard to imagine at the margin there's not some cost because people lost a lot of money. But separately, feel like there's a lot of people that are now looking for better algo stables, and we really feel like Beanstalk is the best. So we'll see how it cuts.
I think that's very fair. And speaking of crypto Twitter, I've been watching a lot of the stuff that's come across and seeing a handful of individuals that aren't folks that I would consider, your typical, part of the Beanstalk army, or, folks that we typically talk to or call on a lot, have had some really interesting comments and feedback around UST that has related to Bean. Detective Grover had a really interesting Twitter thread today that got some attention inside of our Twitter group, and really alluded to exactly what you just said. How there's a potential for a better algo stable to emerge out of this, and was giving a pretty strong nod to Beanstalk, and upon some comments and replies was pretty clear about their support. And seeing that around Twitter, even though we're not up, seeing a lot of positive feedback and some anticipation of Beanstalk coming back online, which has been really encouraging. So, next in the chat, so Harry Smith, our favorite redhead, asks, just for an update on the OTC raise.
Well, I think we gave a pretty substantive one at the top, but we'll restate. Capital commitments are probably up from 15% to 20% in terms of money that's in. Interest is significantly higher than it was last Friday. That hasn't necessarily translated to actual dollars per se. But yeah, tons of interest, and it's exciting. We'll see what happens.
Good. All right. Next in the chat, we got Jams with 3 questions. We'll just start with number 1, and then we'll work our way down rather than going through all 3 at once. Excuse me. First question: how has macro conditions and the recent UST peg impacted fundraising discussions? Are investors still on board? Are they beanish? So the macro backdrop, I think it's harder to paint that as neutral. Capital is becoming expensive, and at least in the short term, people are nervous. So hard to imagine that's beneficial for Beanstalk. But Beanstalk is a very contrarian bet, and some people see that. So, there's I think it's a Buffett quote about when the tide goes out, you find out who's swimming naked. The people that are still have their pants on, those are the ones that are looking at Beanstalk. Excellent. Okay. Jim's second question is: are there still plans to raise? Plans to snapshot the NFT fundraise? Any additional thoughts on how it'll be structured?
There should be a snapshot. Honestly, there has been a lot of discussion on the latest information on, what makes sense for the NFTs, but I'm not totally up to speed on what was decided. So I just don't know. I'm sure there is information. If anyone who has that information wants to raise their hand and come up here, feel free, but I just don't know.
That's fair. And if anybody wants to throw in, I don't know if, Maxo or Austin or Manifold or anybody else, feel free to raise your hand. I'll pull you up on stage, no problem. James' third question. Do investors care about holding an NFT versus, I'm going to say, a fungible token? Do they care? And obviously, we talked a little bit about the functionality of the tokens, but anything you want to add along those lines? And then whether investors would care one way or the other about the NFT itself?
Not really at a substantive level as far as we're aware.
Fair. All right. So NASDAQ, looks like we got your question with Jam's stuff a little bit earlier. Let's see. Plenty of good chat. Okay. So looks like the next question is really Sync's. So Sync asks, thoughts on offering the option?
Well, don't skip Disco Stu's point, because it's a good comment.
Yeah, no, that's very fair. And a lot of times if something isn't in the form of a question, I'm like Alex Trebek, God rest him. So Disco
totally. If it's not worded as a question, it goes over Rex's head.
That's right.
He's just a T-Rex, folks. He's right. Trying his best.
I can barely reach the keys. You gotta make it easy for me. So Disco Stu makes the astute observation that stable equals behavior, not outcome. So yes, no redemption promises. So the label might be misleading. And actually, when you were giving your initial part of that answer, that's actually a thought that ran through my mind too, was, the term stablecoin is itself possibly a little misleading.
Well, what would be a better name? Like,
jeez.
Volatility minimization system? Like,
deviation resistant.
And it's like, what's a synonym for volatility minimization? It's like stability maximization. So at some point, all roads lead back to, albeit a slightly imperfect name, a likely whatever.
It's true. So, next question. Thoughts on offering the optionality for an on-chain LFG council equivalent by establishing a hardcore Beanstalk participants to offer permanent deposits in the silo to uphold a baseline continuum of liquidity for Bean.
So, I don't really understand what this has to do with an LFG council. Frankly, I'm just not too familiar with that. I don't like the sound of it.
Think. Yeah, perfect. I was just gonna invite you up.
Oh, help me out here.
Come on up.
Hey, guys. Hey, yeah. Thanks for taking this question. So, yeah, I brought this kind of idea up before in the past, so this isn't the first time you're hearing this, Publius, and I don't mean to be redundant, but just thinking in terms of recent events with UST, they have, my understanding, and I'm not too well versed in how their kind of off-chain stability mechanisms work, but I do understand they have some sort of, they call it an LFG foundation or council that is kind of doing off-chain stability attempts for UST through their reserve and all that stuff. Obviously,
sounds very decentralized. Incubate. Tell us more.
No, so it's not, right. So, but that's where Beanstalk kind of really stands out, right? Everything is on chain. You can see it, and so I was thinking about this permanent deposit optionality. It would allow any participant in Beanstalk that's very committed to the protocol and would like to see it thrive to kind of step in situations where there is volatility, or even in normal market conditions, to step in and say, look, I'm going to offer this deposit to the silo as a permanent deposit. I don't want it to be withdrawable. It would not be protocol owned liquidity, because Beanstalk doesn't not believe in that. I would call it protocol contained liquidity, such that liquidity would remain in that respective liquidity pool. The depositor would receive maybe an NFT as a receipt of that deposit, which would represent their stock and seed allocation, and they would be able to claim farmable beans accordingly. And to me, that, I think the reason I'm also kind of thinking about this too is there's been speculation that Citadel, Ken Griffiths, you're from Chicago. You guys are from Chicago, or University of Chicago. So
I know the Ken C. Griffin Economics Department. We were all so pissed when he paid like $300 million to rename it that. Like,
there you go.
That guy has no ego whatsoever, clearly.
Yeah. Well, there's speculation, and I don't know if this is definitive or not, but there's been a lot of speculation on crypto Twitter over the past few days that Citadel has been involved in potentially some of the sophisticated behind the scenes, stuff with UST. And in terms of trying to depeg it or being involved in trying in shorting it, that's rumors. It's not definitive, but that's what's being said by some prominent crypto people on Twitter. So I'm just thinking now, like, the ecosystem is it's inviting more sophisticated players into it. So how can Beanstalk kind of become more robust from an adversarial perspective? So I just wanted to kind of get your thoughts.
Yes, this is a great line of thought, Syncubate, and we'll separate it from the NFT idea, because I think we've talked about that extensively in the past.
Yeah,
but I think we would make the argument that the centralized control over the Terra ecosystem was one of the main things that got them into this current situation, because you have people that felt responsible for the economic success of the protocol to the point where they were willing to compromise the integrity of the model, like creating a BTC reserve in order to hedge their bets effectively. And you could make the argument they were doing their best efforts to keep the protocol alive. But at this point in time, it's very clear that that decision to move to BTC collateral is what exacerbated this attack, right? Because what it seems like happened is the people that launched this attack helped fund the attack by shorting Bitcoin. And that short was the fact that LFG now had all these BTC reserves, that it was very clear what needed to be done in order to create the situation where LFG would have to market dump their BTC. That was ultimately what created a profitable circumstance for this type of attack. And so it was in practice the very people that were trying to help the system by getting involved and changing it. And, again, it's all, we assume it's with the best intentions. They ultimately fucked up, and that hurt the protocol. And so we would be, I would say, vehemently against, might be an understatement, any sort of council or body that is now going to be making monetary policy or doing open market operations. Like vomit would be the reaction to something like that. The whole goal of the design of Beanstalk is for independent market participants to be doing what they view to be in their own best financial interest, and Beanstalk creates incentives to return the price to $1. Again, it's almost impossible. I would argue it's probably impossible to prevent the price from trading below $1 in all cases. It's just impossible. Particularly when you consider people may want to sell their beans below $1 for whatever reason. It's just the nature of the beast. All you can do is give them a strong reason to believe if they wait, they will be able to sell their beans or their UST or whatever their stablecoin is for $1 at some point in the future, and therefore they should hold. That's it. And any centralization built on top of that to protect the system is in practice going to do the exact fucking opposite. So, hate, and I don't use that word almost ever, hate the concept of some sort of council.
Yeah, no, I'm 100% with you. I'm totally with you on that.
You gave us a meatball there, Sink.
Yeah, I know. I'm trying to make it relatable to some of the people that might be following this UST stuff. So, in a sense, like that's one of the things I enjoyed about Beanstalk is, incentives
Past
for different
tense?
market.
Past tense?
Well, it's good. I'm going to enjoy it too. I'm going to continue to enjoy it, but I'm thinking from like more adversarial perspectives now. It seems like, and I'm not saying like a centralized body. What I'm saying is additional optionality vis-a-vis maybe a silo, like a separate silo one day that would be just for permanent deposits, and that people can, if they so choose, participate in that silo, maybe for some extra seeds in exchange for doing so. And again, I wouldn't expect most people to do it, right? I think most participants would want to have withdrawable deposits, but I still think, you might have somebody that does really well in Beanstalk, does really very tremendously well, and decides, you know what, I consider this my kind of contribution to the protocol indefinitely. Whether it assures that the protocol survives to live another day, to live another decade, I don't know. But this is my contribution. The protocol did well for me. This is you know what I'm saying? So, and it would be an interesting metric, I think. Like, this is committed kind of liquidity regardless of what happens,
Again, this goes back to who controls that liquidity after it's permanently deposited. Is it the depositor? Like, what do they care about it at that point? It's not theirs. They don't have any access to it. So what do they care about doing it? So, in short, I don't know. We've gone back and forth about this permanent NFT idea endlessly. Still think it's probably not economically the best idea, but, that I'm sure we'll continue to have that discussion in the future.
Sounds good. Thanks.
Yes, Sink, thank you as always. Oh, man. Oh, hey, American Pharaoh, even though it was a joke, glad we gave a decent answer.
A bunch of autists that went right over our heads.
Again, not only do the questions have to be in the form of a question, they also have to specifically signify that they're not sarcasm, because I can't get it detected. Oh, looks like Dumpling may have maybe best taken to the benches this time around. I don't think you're supposed to, if you've got a worm in your tequila, you're supposed to, or in your mezcal, you're supposed to eat it. I don't think you're supposed to eat a scorpion out of a bottle of tequila. All right. So
I didn't eat the scorpion, but had the drink with the scorpion.
Oh man. So, was it like a literal dead scorpion?
There was a scorpion in the bottle. Yeah.
Man, that's serious.
It's quite the ride. Yeah. So thank you for hosting, Rex.
My pleasure. All right. So American Pharaoh has the next question, and it is I think it's a good one. Obviously, with everything we've been talking about, probably a lot of folks are familiar in this room. But for what it's worth, Publius, you want to talk through the mechanic differences between Bean and Luna, and I can give some references for other materials when you're done.
So, Luna, or Terra, we should say, is what we would classify as a mint and burn stablecoin, or a protocol native collateral stablecoin, where Terra has a really innovative solution to the collateral problem, whereby the collateral problem is that there's not enough collateral exogenous to protocols to create enough stablecoins to meet demand. That creates opportunity cost, which creates negative carrying costs, and that's the main problem with stablecoins today. Terra uses protocol native collateral, Luna, to backstop the value of Terra. UST. There's other Terra stablecoins pegged to other currencies, but UST is the biggest one by far. Now, it's important to note that the main mint and burn concept comes from the fact that you can, when the price of Terra, let's just use UST, UST is too high, you can burn Luna in exchange for more Terra and sell them above peg. And vice versa, when the price is too low, you can burn Terra into $1 worth of Luna and, recoup the difference. And so in practice, the thing underlying the value of Terra, the stablecoin, is actually the demand for Luna. And demand for Luna can come from a couple different places. So Luna is the staking asset for the Terra blockchain, which is a proof of stake blockchain. And holding Luna entitles you to a portion of network fees and fees from usage of Terra. But in general, there's not, currently a lot of the demand for Luna is speculative, and that appears to be what is driving some of the downturn at the moment. It was speculative as to the future demand for UST, because if we go back to that core economic model, excess demand for UST effectively goes to Luna holders under this economic concept, that a lot of the demand for Luna was based on the demand for Terra or UST, and now that there's no demand for UST, there's also no demand for Luna, or less demand for Luna, we should say, and that's creating this negative feedback loop. Beanstalk has a fundamentally different mechanism behind it from a couple different perspectives. So first, there's no collateral whatsoever in Beanstalk, protocol native or otherwise. Instead, Beanstalk uses credit, its ability to borrow beans and remove them from the supply from the market, to create stability in the bean price. And in short, there's a couple economic key differences, most notably, whereas UST, doesn't have any sort of yield associated with it. It's neutral carry at best. There's protocol fees associated with spending it. In the case of Beans, Beanstalk will pay you just for holding the stablecoin. And so Beans are positive carry. Now, in addition to the credit mechanism, as opposed to the collateral mechanism and the positive carry, there's one other, or two depending on how you think about it, main differences. The first is that speculators are separated in the Beanstalk ecosystem from the users, but that doesn't necessarily preclude the users from benefiting from the growth of the system. So whereas the speculators in the Terra ecosystem all hold Luna and the users hold Terra, in the case of Beanstalk, you have speculators lending beans to Beanstalk in the field, and then you have, I guess you could make the argument they're speculators, but they're also users or holders of the currency of beans, holding them in the silo, also collecting yield. And so that's where the protocol native yield actually comes from, and that's probably the most substantive difference. Now, economically, it is really noteworthy that the only way to acquire stock and entitle you to that portion of Bean seniorage is to own Beans, to own the stablecoin itself, effectively, or LP tokens that they trade in, whereas the only way to participate in the seniorage of the Terra ecosystem is to buy Luna. And there's no need to buy Terra to access Luna, if that makes sense. Whereas, in order to access Bean seniorage, whether you're lending to the protocol or depositing your beans in the DAO, you need to buy the beans. So maybe at a macro level, the economic difference is beans are the entryway into the Beanstalk ecosystem, whereas Luna is the entryway into the Terra ecosystem to some extent. Not sure how accurate that actually is as a characterization, because you can buy Terra as well, your UST, but hopefully that's clear.
That's good. And I would, just as an additional resource, if anybody's looking for some stuff to read, John Woo, I don't know if anybody follows John Woo on Twitter, definitely a good follow, and wrote a really good thread around what's happened over the last 24 hours or so, 36 hours, and kind of worked in all those functional components as well. So if you're looking to get more familiar with Publius, which you just walked through some of the functionality, Will covers that in his Twitter thread as well. So highly recommend that. I will drop that into the chat here later on. Okay. So next question is in the chat. Oh, we got in the queue. How about we'll bring Terraboy up and have them talk through their question, and then we'll get back into the chat. All right, Terraboy, you're being invited up now. Go ahead.
Hey, Publius. I had a quick question. Wanted to get your thoughts on Janet Yellen's comments about, adding stability and regulation to, what's happening with UST and kind of, what that would look like for the market and, specifically for Bean.
I haven't had a chance to listen to them, the comments. I hate to share my frank comments because it tends to, our honest comments will probably put a target on our back, but, it's one of those, it's just fucking talk, It's just talk. So, what the fuck are they actually going to do? They want to put stability into the market. The Fed should bail out UST. How much does that cost the Fed compared to their quantitative easing? So, it's just bullshit. And it's just a bunch of boomers trying to protect their old financial system. So, good luck.
Fair enough. Thank you. Thanks, Rex.
Anytime. And it's interesting. Obviously, Yellen's comments earlier today made a lot of headlines. But actually watching the clip of her talking through the UST situation was a very short clip. I think it was less than 30 seconds. What she actually talked through, and I would say it was not substantive at all. It was essentially, just basically what Terra said, a call out for some type of structure, but no recommendation about anything specific. The headline was definitely a lot more alarmist than the actual comments that she made. All right. So next question in the chat is neurovirus, and I'll read down to the question and give you a second to respond, and then looks like the rest is a thought tagged onto the back. So neurovirus writes, so it seems Publius says an NFT is better than for example, ERC20 yield-bearing token because a market for trading those is available basically in a peer-to-peer over-the-counter deal on OpenSea. Isn't this the same as just not worrying about secondary liquidity for a fungible token?
It's not about not worrying about it. It's about what happens to the beans that are rewarded to the fungible token while they're in an AMM. And then it's like these beans are just going to be owned by the AMM contract. So there'd probably have to be some sort of custom support to facilitate the claiming of those beans. And it's a development overhead. And at the moment, that's just not probably not a good use of resources, frankly.
All right. And Neurovider just essentially finishes up by saying, again, I feel requiring fixed increments in a minimum will deter a portion of possible investors from the retail side. Yes, they're a small minority, but I believe the raise being open for everyone. And admittedly, personally, I tend to agree. And go ahead. Publius.
Open for everyone. It's so hard to make any argument against that. The minimum. Yeah, it sucks. It's like, in theory, you'd like everyone to be able to participate for a cent. I have no argument against that whatsoever. It's just a practical issue.
Very fair. Okay. Next in the chat. So I'm taking Guilfoyle's comment to be tongue-in-cheek. So next question in the chat is from Harry Smith, who asks, how are the first couple of days of the audit going?
Pretty good. We have a call with Halborn tomorrow to get some sort of update, I think. But actually, maybe that's not. Maybe it's unrelated to the audit. But we have a call with Halborn tomorrow. I don't know. No news is good news. They said they'd reach out to us if they needed anything. So we have a Slack channel going. There was some chatter past couple days. I'm scrolling through it now. It's, hunky-dory.
Good to hear. All right. Next in the chat, Kobe Bean. Do we have to wait for the NFT art to be created? Couldn't we just release a placeholder NFT with an art reveal at a later date?
Yes. The art is not going to be the holdup here whatsoever.
Great to hear. That is a question that had run through my mind over the last few days too. So Grit, Kobe, thanks for asking, and Publius, thanks for the answer. Justin Bean asked kind of a related question, asking for essentially a point of contact or source of truth for updates, ideas, and progress on the NFT-driven barn raise.
Honestly, don't know and don't want to call anyone out. I just have no idea what's going on there.
I think that's something that I think that's something that the core team can take back and say, okay, who would be that central point of contact? If we don't have an answer right now, just to Bean, we can figure out that primary point of communication. So Austin, who may have just, in the chat below that made themselves something like a central point of contact, which I would be completely fine with, says, thinks that it would be reasonable to expect an announcement and associated snapshot about it by the end of tomorrow. So Austin's got some information there that will be coming out relatively soon. So high five to Austin. Oh, and mentions it's largely similar to the existing plan. Just swapped for NFTs with a couple other details. So more stuff to come, sounds like, by the end of tomorrow. So thank you, Austin, for the information. Actually, Austin, I'll give you 1 second. Is there anything you want to hop up and talk through? Give you the stage for a minute if you feel so led. Don't feel obligated, though.
No, not really, honestly. I feel like, we'll just let the snapshot speak for itself.
Awesome. Thank you very much. The Guilfoyle has high suspicions of Newman. All right, good chatter from Just a Bean. Dumplings throwing shade. The Bernoulli Bean is apparently U Chicago. Another U Chicago farmer. Familiar with the econ building at U?
Which econ building, bro? News to me. Although I haven't been there for a while, so what do I know? It's also not like I went to any economics classes, so.
Well, and Bernoulli wrote it at the bottom, but I cannot pronounce that.
Oh yeah, Saya. But was that Griffin? I didn't know that it was Griffin. Oh my God, there's Saya. See, this is literally proof. I hardly went to college. Yeah, literally proof. Like I'm not. I have no degree. Brendan and Mikey have the degrees here, so U Chicago questions directed to them. That's pretty funny.
Love it.
Now the U Chicago heads in the chat are making themselves no.
All right, looking down through the chat, Dumplings throwing more shade at Ken Griffin. Man. All right, yep. And then Bernoulli's throwing shade at Ken Griffin. All right, okay. So Disco Stew asks, is there any serious consideration of trying to purposefully attract past and current Luna and UST holders? Seems pain and fear could be easily addressed by a better stability protocol like Beanstalk.
100%, and that's one of the reasons it's painful not to be up right now.
Very fair. Austin being helpful as usual. Jams is offering Dumpling. I can assume Dumpling some Terra mana. Let's see. Okay, so next question is from Mew Mew. Let's see. I want to make sure. So they reference a Twitter post from Modern Farmer, who admittedly I'm not familiar with. I'm under the impression they are not a Beanstalk farmer, though I could be incorrect. But underneath that referenced tweet, they write, is this an Oracle issue giving a higher price for Luna, or is it a liquidity issue on Terra Station?
So there was some chatter about it below, but it has to do with there's a throttle limit on the redemptions back and forth between UST and Luna, I think on a daily basis. And so that's what creates the limit effectively.
Gotcha.
And then if you're holding UST and you can't redeem it for $1 worth of Luna and it starts to depeg, you may say, well, I'll take 80 cents instead of waiting and hopefully getting $1 worth of Luna at some point. And that's where you start to see a bank run.
Gotcha. Okay. And yep, now I'm seeing that discussion play out. Oh, Sync drops in Mark Jeffrey, our cool rich uncle, who I've heard referred to at least as such. Looks like he gave some love, showed us some love. Oh, this was from a while ago, though. But still, maybe we should try to get Mark to retweet that tweet. Wonton asks if did Rex just say Ja Rule? I didn't, but I can ask in Fat Joe fashion, what's love got to do with it? Terror Squad, old school. Anyway, so let's see, more discussion about
Yumu Machine is just dropping fuego in this chat. I just want to shout them out.
Jimmy.
Is there a good reason for the limit? What a great question.
Yeah.
We would make the argument that this is a limit that exists to protect Luna holders over UST holders. And it goes back to, by a protocol design perspective, this depegging is designed. So it's not a problem per se. And the concept is either you're going to take $1 worth of sell pressure in Luna, or you can have UST depeg and take 60 cents worth of sell pressure. In a bank run scenario, it may be better if people are willing to sell for 60 cents to just do that. And that's a fact, right? So you could make the argument the limit exacerbated the bank run, and there is something to be said for that. But, that's where we haven't studied their model in depth to have a real opinion on one way or another.
Good stuff. Guilfoyle also gave some feedback as well. And go ahead, Publius.
No, I was just going to say, I'm reading Mew Machine's comment that a Soros-style attack on Bean isn't profitable because there's only one token, no Luna to short, and also no BTC reserves to be dumped. I don't necessarily... it's really hard to understate how the BTC reserves and the ability to exacerbate this play by shorting BTC made this a profitable trade, but also being able to short Luna was clearly part of it. And so think about stock design as it becomes liquid, that plays in. Yeah, the past couple of days have been so much great data to just study. Very fun.
All right. Down through the chat, lots of love for your not only for you, Publius, but for the mic click. I listen for the mic click now because I can tell that's my cue for when I can keep going through. Alex, you said it. Mic click is the new mic drop. All right. Homer Beanson has words of warning. Yeah, it would. Which I think there's some wisdom in it. Just concerned about the general, the bad publicity.
Yeah, I mean, and they make a good comment. A stablecoin and a dollar are very different things.
Yep.
We need to emphasize those differences. Definitely. Like, you have something that's X, and then you have something that's designed to maintain a value of X. Like, it's definitely not X. And there's no ifs, ands, or buts about it. So I think that's essential.
Yep. Really good chatter even below that. Alex has a really good comment back, and yep, Homer talks through basically what you just talked through, Publius. Okay. So, Guilfoyle, next in the chat, references a proposal from Disco Stew. So I'll read through it real quick, and then hand it over to you, Publius. So, from Disco Stew, perhaps unpaused by attracting scared Luna UST holders, offer $20 worth of Bean for each Luna, and the promise of safe, stable haven, free from stress and egomaniacs. I'm gonna say with the BS still over there must be a couple, let's say, whales who would take that offer. Then we barn raise the rest. Start up faster and avoid the over resilience on concentrated wealth that seems to be in the current plan. So essentially, Disco Stew is asking if it makes sense to make a special offer to Luna and UST holders.
I mean, frankly, would make the argument that economically, accepting a Luna versus another asset, same offer is there for the people that currently hold Luna to sell their Luna and participate in this thing. So there's just I don't know. I don't think it's a substantive idea.
Very fair. So Dr. Beans asks, what is the minimum? And Dr. Beans, I'm not sure what that is referring to.
The NFTs, presumably.
Okay.
Don't know. Whoever's, like, whenever there's an NFT update, presumably that will be included as the cost of an NFT.
Oh, and now looking at Guilfoyle's reply to Wonton, it's about the thread that I was referring to. Twitter handle is JohnWu, JONWU _ JohnWu.eth is he's a relatively well-known Web3 writer, and did a really good thread. I will put that in the chat when I get a second, in the classroom discussion chat, so that people can read that as they get a chance to. All right. So Alex writes, is there a date for the NFT sale? And I don't know if we've talked about this, and I don't know if it's something that Austin wants to comment on. I don't think we've talked about an actual date thus far tonight. Here's J-Dubs.
Hey, guys. Just to echo kind of what Austin said, and even what Publius said. I think there'll be a lot of details that are going to come out probably within 24 to 48 hours in terms of timeline and what we're thinking for pricing and stuff like that. Just so everyone knows on the call that we've had a great community effort in terms of like Beanstalk farms and contributors overall, and we're all trying to push together as much as we can, as fast as we can. But definitely stay tuned because a lot of the questions about the NFT stuff will be addressed in the near term.
Perfect. Thanks, J-Dubs. All right. So next in the chat, or Beanson, continuing the conversation. So basically what Omer talks through is, so I'll grab a kind of the middle sentence of their comment. What I'm drawing awareness to is the fact that the demand for USD pegged stablecoins and integration of stablecoins into DeFi is driven by demand for the US dollar as a reserve currency of the world.
Yeah, I mean, can we have limited time. We're already over. Can we just read the questions that are left?
Yep. It looks like we are. Geez, they're coming in. Yep. Yeah, I apologize for running long. Through.
Scooby22 asks, before Bean was hacked, there was a lot of discussion on the benefit of keeping the level of the pod line stable at 682 million, which was an important mechanism in order to measure demand for debt. I wonder what conclusions were drawn from that, if any. I ask specifically because at the new launch, we will have a much higher level of debt, and I wonder how much demand there will be for new debt at a higher level of debt in the ecosystem. I think this is important because if someone tried to attack the system, Bean may be subject to prolonged periods of off the peg due to potential lower level of demand for debt. Any thoughts here? So wanna correct something there in the statement, even though it's a great point, which is not that there's a need to keep the pod line at 682, but that under the soil parameters from BIP9, there was no need to increase the amount of pods outstanding. Now, there was a discussion of lowering the amount of pods outstanding and would make the argument that we're going to get good data upon relaunch because since 1/3 of new Bean mints will go to paying off debt but not pods, the amount of outstanding debt will actually start to decrease, and we'll get to see how the system works in that scenario. So to some extent, there will just be some very interesting data to learn from upon relaunch. But the concept of this being a large vulnerability to Beanstalk, let's say the full 77 million is raised, it's at 500% weather. It's the equivalent of 462 million pods being issued, which would take the total pods to like 1.1 billion or so, at 108 million Bean supply. So a debt level of like 1,000%. While that's much higher than the 600% debt level of the system prior to the attack, when was the system last at 1,000% debt level? Like 4 days prior to the attack or something. So marginally, it's not so bad. Would agree a lower debt level is better, but generally very, very enthusiastic about the state of the system from an economics perspective upon relaunch. But agree, a higher debt level is obviously worse.
Very fair. And actually, that looks like it is, unless I'm missing something in the chat.
All right, Mark Jeffrey tweeted, and then someone asked for comments on it. Oh. In Bean, could this UST thing happen? The answer is yes. And Mark suggests that if someone accumulated a significant amount of beans and then dumped them on Curve all at once, draining the liquidity, Bean would depeg the same way. Totally agree with that. However, the Beanstalk model is designed to return the bean price to the peg. He makes a comment in the follow-up tweet that increasing the weather would not likely create enough demand for soil to return the price to the peg. But that presumes that there wasn't demand for soil up in excess of the amount of the depeg, if that makes sense. So you can bring beans 1 million below peg or 1 billion below peg, but if there's demand for 1 billion soil, then it's not a problem. Furthermore, you need to subtract the difference, even if it's 1 billion below peg, the amount of converts that will minimize the amount of beans that actually need to get lent to Beanstalk. So between the convert functionality and I think a little bit of a misunderstanding of the assumptions of the state, or maybe not a misunderstanding, but an unfair assumption of the state of the system prior to this theoretical curve attack, I think it's certainly possible, particularly if the weather was at a rate where it wasn't attracting significant amounts of excess demand for soil. So it's very possible. But generally, between convert and the soil mechanism, we would expect Beanstalk to respond to it, not immediately per se, right? Slow and steady is the name of the game here. So this goes back to Beanstalk doesn't make any sort of hard promises on peg maintenance, but would expect Beanstalk to be able to respond to this type of thing at some point.
All right. Looking through a lot more good chatter in the class discussion, but I don't see any other questions unless there's something I am missing.
From Egg Salad, with all the talk of danger from Fed with USD stables, I assume we could easily peg to something else. Could that be done in parallel, or would a switch over be fairly easily possible? Where would you go? Euro? I would laugh at the Euro suggestion. The Euro is just so funny. The market has a demand for dollars right now. Beanstalk can issue, in theory, and there is some complexity around figuring out the finer points here, but in theory it can issue assets pegged to a variety of different things. The main problem that needs to get solved is the Oracle problem, whereby there needs to be some other asset on the Ethereum blockchain pegged to the value of the off-chain asset Beanstalk is trying to peg the stablecoin to. So there's some under the current Oracle solution, some outside requirement. So there's some limitation, but could do some sort of inflation-adjusted basket, could do currency basket, could do a bunch of things, whatever the market would demand.
Okay. Looks like, besides Alex messing with me in the chat, it looks like we are down to the bottom. And yes, it does screw me up. So I guess I'll hand it over to you, Publius. Is there anything that you want to close out with?
Fun class today, huh?
Indeed.
Good stuff. So, yeah, all right. We'll talk again soon, gang.
All right. Thanks, everybody. I always appreciate you coming along for the ride. Have a good evening.